Hi, this is Craig Haskell with the Value Hunt Academy. You're listening to another exclusive interview with a leading authority in the syndication of value-add real estate. You are in for a real treat. We are speaking with Dan Handford, founder of Multifamily Investor Nation, who has become a leading nationwide entrepreneur. He started and is currently running a seven-figure medical practice, and recently he came on the scene and started a successful real estate syndication company, building his portfolio to over 3,000 units in less than 1 year. Wow! Dan's success comes from hard work, yes, hard work, focus, and his amazing networking skills. He's built a Multifamily Investor Nation meetup club to over 2,000 members. Dan thinks big, and he goes big. In this interview with Dan, you will learn why he started the syndication business and how he's grown it so quickly. Dan's strategy to finding value-add deals in a tough market. Why he focuses on a specific investment strategy. 5 unique money-raising tips. Inside details on a multifamily property Dan's currently repositioning. How he sees hidden values that others don't see. Why building relationships has been the key to his success. How he helps new syndicators by participating as a loan guarantor. If you're a new syndicator wanting to start your syndication business, then you must listen to this high-value interview with Dan Handford. Dan is the ultimate doer. Find out what he's doing right now and how he's doing it and how you can learn from his success. So I want you to hold on tight. We're going for a ride. Hey, Dan, I'm sure I feel fortunate that you're here with us today because you've really experienced a lot in the last short while because you had a great practice and chiropractic practice in which you're still involved with. But at some point you decided to get into real estate, started to get into multifamily investments. And so what I want to do is I'd like for you to kind of share your story on how you got in chiropractic quickly and what was the transition. What was it that made you switch to real estate investments?
Sure. Well, it's something I'm very passionate about, and I'll kind of get to what that reason is, but to kind of give you a little bit of a backstory on it, when I was in chiropractic school, you know, I always have had this entrepreneur, you know, slant to me, if you will, and even in chiropractic school, I was an entrepreneur, and I started a company which I still have today called Shop Anatomical, and it's a website that sells skeletons and skulls and brains and hearts and all kinds of plastic educational models, and we have had that business for a little over 10 years, actually probably like going on 12 years now, and it continues to produce 7 figures of revenue, and it's a passive income stream for me, and that business is what allowed me to start my practice when I got out with zero debt, and even today I have zero debt on the practices. I have 5 of them, but when I started out as a chiropractic only clinic, and then I started to integrate medicine into the clinic. So I really felt like there was a place for alternative medicine in our clinics, and so I started to reach out to some medical doctors. I ended up interviewing about 65 different medical doctors before I found the one that really wanted to practice the way I wanted them to practice, and you know, the way they wanted to practice too. So I wasn't like forcing their hand or anything. It was just a matter of trying to find that needle in the haystack, if you will, of somebody who had the same philosophy of practice, which is, you know, no drugs, no surgery, you know, more alternative. And then what I started to find out is that about a year and a half ago, I started finding out that I really started paying a lot of money in taxes, you know, 6-figure checks, and I was tired of doing that, and I started to go on this quest to try to find the best way to legally shelter my taxes, if you will. And so real estate was one of those things that I researched and really found that multifamily was the ticket in real estate that provided the most tax advantages because of the benefits of cost segregation, bonus depreciation, accelerated depreciation, all of that kind of stuff. We can actually be cash flowing off these properties and then taking that loss at the end of the year. So that was really the main reason why I got into multifamily, you know, to get you know, full bore when I first started. And I got into it about 2 years ago, but really not heavily until this year. And then this year I started getting into it full time, and the practice is now at a passive income state as well, because I have a team that actually manages all of that for me as well.
Well, when you got in the business, you went big time, man. You're turbocharged. I mean, I look at your portfolio of multifamily properties, 1,300 units, valued at around $120 million, and you did that in less than a year. That's fast. So how did you do it?
Sure. Well, I mean, I think it goes back to, when I was first trying to find, where I wanted to be in this space. I didn't want to do anything on a small level. I had already been playing on a fairly large level as it was, and if I was going to do something different, I wanted to make sure it was bigger and better and greater than what I was currently doing. And so the first thing I decided to do was go out there and try to find a mentor. So I found a mentor that was already where I wanted to be, and so I also wanted to make sure I had that connection and that one-on-one with that person. And so hired that mentor, started being able to partner with other people, other syndicators on some of the deals, and started putting some of my own deals together as well. And it's really exciting because, even just yesterday, we put a round 3 final offer. It was a best and final offer on a $47.5 million project that has 368 units in it. So it was pretty exciting to be able to do those kind of things, and we're actually competing with a publicly traded REIT on that one as well. So we're about 95% confident we're going to get it, but I don't want to count my chickens before they hatch, if you will.
Right, that happens all the time, yes.
Yep.
So that's great. Congratulations. I hope it gets closed. You found a lot of value deals. You're a value investor, and it's a tough market out there. People are having hard times finding good deals right now, finding good value deals. And you've had success. So what's your secret to find these deals?
Well, I would say that the biggest, it's not really a secret. It's more of a, what are some things that, when you look at a property, can you look at it differently than somebody else? Do you look at a property and just go, I don't really see any value there, or do you look at it and go, what is somebody not looking at? What are they not seeing? And I'll give you an example of that, what we found on a property. So we have a property that we're going to be closing on in a week and a half. It's a 130-unit property in Greenville, South Carolina. And we, for one, on that property, there's a whole other lesson on that property where we actually put an offer on. It's our best and final, lost the deal to another REIT, and 4 weeks later, I got a call from the broker. They couldn't get it done, and they asked us if we wanted it at our last offer. And we were like, absolutely. And it's crazy because there's been several brokers that we've talked to that aren't even related to that broker that sold us that property, and they have said that we basically stole that deal. I mean, because the seller really just wanted to close it up before the end of the year, and they didn't want to have to go through another round of offers, and they just gave it to us at a steal of a deal. So obviously that was a good thing, but the biggest thing is when you look at a property, trying to figure out where are some hidden value adds. And so on this property, it used to be the leasing office is kind of like a U-shaped building, and so there was 2 wings going off the end of it, right? And it's a 4,000 square foot leasing office. Now, when you think about that, I mean, I know you, Craig, you know this. That's a very large leasing office for a 130-unit property.
Absolutely.
There is no reason you need 4,000 square feet, And so when we were walking the property, we always keep our eyes and ears open to what might be that next thing that might pop out that we think about, the value that you can bring that nobody else is thinking about. And in that property management office, there was a couple scenarios that we ran, but we basically, on the wings of the actual leasing office, each one, since it actually used to be an old doctor's house, and then a group of investors bought it 30 years ago or so, and then built up the apartments around it. But in that leasing office, since it used to be an old house, there's actually bedrooms on each side. There's 2 on each side, and they have bathrooms attached to it. So when you think about that, right now one's like a fitness center, and one's like a manager's office, and all this other kind of stuff. So, and one's a kitchen, But when you look at that, when I look at that and I go, I wonder if we can turn those into units. How can we generate revenue from that dead space that's just sitting there doing nothing for me? And so we actually considered 2 different avenues there. One was to add 8 units. So you can actually do 2 on the bottom and then build up 1 floor. And so you have 2 on the top, 2 on the bottom. And they'd be smaller studios, so you wouldn't be able to get as much, but you can get more than what's currently there. And then the second option is to just don't go up, just renovate the 2 on either side, so you add 4 units. And we ended up deciding that because of some code issues and stuff like that with parking and stuff and parking ratios that we weren't able to go up, but we still are able to add 4 additional units to that property. So that right there is a value add that nobody else was looking at. Like, we talked to all the property managers around the area and stuff, and of course showed them what our plan was, and we actually didn't show all of them that plan, but we asked, what are some different things that people are doing, and the one that we chose, they're like, no one that came to me has any idea of doing this, and it's a phenomenal deal. And we're also looking at that property, and we're going to be putting a larger capex in the interior and exterior to the tune of about $1.8, $1.9 million on those 130 units to reposition it from a C-class property to a B-class property, and it's 10 minutes to downtown Greenville, right off of one of the main 34,000 cars per day thoroughfares, but that connects Spartanburg, Greer, Taylor's to the downtown area, downtown Greenville.
Well, that's good. So how do you find that deal? I mean, how do you find some of these deals? Are you looking at listed deals, just buying deals that are listed, or are you getting off-market deals, or how are you finding these things?
Sure. So one of the things I always say is you have to be focused, and I'm sure you would probably say the same thing, Craig, where you basically find, put down what is the criteria of the properties you're looking for, and don't look outside of that, because then you get distracted. You got to focus on what your criteria is, and that was one of our problems that we found, earlier on, is that we were looking at everything. It was 30 units, 40 units, 50, 70, 80, 300. We were looking at everything, and we decided to focus on 100 units or more. And so we only look at 100 units or more, 1980 to 2005 vintage, BC value add. And of course, we're looking for certain, IRR targets and cash on cash targets and various things like that when we're doing our underwriting. But when we look at when we're looking for properties, that's all we look for. The deal comes through and it doesn't fit our criteria, it goes through our email, we press delete, we don't even look at it. I just had a wholesaler today reach out to me and said, hey, I have a few properties that you might be interested in, and you want me to send them to you? And I said, well, you don't even know what my criteria are. So why would you waste my time sending me a bunch of properties if you don't even know what my criteria is?
I love that. That's great.
It's true. I don't want to waste my time or theirs by them putting together a bunch of these properties that they probably just scrubbed off the MLS and want to send to me. And so what we typically do is twofold. So it's usually always through a broker, but with these 100 plus units, most of the time they're with one of the larger brokerage firms, the Cushman and Wakefield and the Marcus and Millichap, and we're in the Southeast, we have Capstone Apartments, stuff like that.
Yeah, right.
So I'm sure you've heard of all of those, but we're with all of those. Of course, we're on their 2,000, 3,000, 4,000, how many people they have on their email list. And so we get that deal flow on a daily basis, but we only look at the deals that fit our criteria. But what we found is that once we started to close on some of these deals, that's when they start to trust you, and that's when they start to send you some of these, I say with my finger air quotes, off-market deals, because Craig, and you might agree or disagree, but I don't think there's ever really a true off-market deal. I mean, you say it's off-market, but they didn't just send it to you. They're going to send it to you, maybe their top 4 or 5, and you might still consider that off-market, but, I don't think any broker is just going to send it to just one person and that's it,
Right.
So, but they're not, obviously, when we say off-market, they're not listing it, any of these larger properties on the MLS or,
Right.
anything like LoopNet or anything like that. So all these are going to go through at least the better quality assets. Some of your tertiary and quaternary markets, you might find some, there's one right now, I think I might have saw it was like 160 units, but it's 160 units for $4 million. So you can tell It's probably a C-class area or a very low-end C-class area that you're going to be buying that in a tertiary or quaternary market. But to buy 160 units in a Class B, primary or secondary market, you're not going to get a deal like that. Not in this kind of market.
Nope. So you're out looking for deals, and you're looking for the perfect deal, the home run. What are you looking for? What are 3 or 4 things that you look for in a great deal? What are the critical things that you really need to see in a great deal?
Sure, sure. So, we always are looking for, we always say that sexy word of, value add, but, what does that mean? And so I kind of gave you a few ideas of trying to look outside the box, try to find, is there some other areas to value add? But really we're looking for properties that, are around that 1980 to early 2000 vintage that haven't been renovated since then, or maybe have done like 20 or 30% of the renovations, and they've proven the business model of being able to renovate some of the units and be able to push the rents up. And then, of course, whenever we do our full underwriting, we do a full boots on the ground comp analysis, so we don't just trust what's on the CoStar reports or what's on apartments.com or wherever. We're actually going and validating it in person. So we go and pretend that we're going to try to not buy it, but rent the property, and we have a whole story behind how we're not renting it, but we have our parents that are moving in town and they're wanting to rent it. So we're information gathering, and then it allows us to be able to ask more questions about the area and about the property, because we're pretending that we don't know anything about it. To be able to get that information and gather that data. And then once we have all the information from where we think we can push the rents based on the comps and the renovations and the similar vintage and renovations that have been done in a similar property in the area, we're going to put it into our underwriting spreadsheet, which we have our own proprietary spreadsheet that we actually developed ourselves for our own underwriting. It's nothing special, I wouldn't say. I just say we've developed it on our own because we like to work with stuff that we create, and so it's been developed for us. And in that, we are looking for certain targets for returns. So we're looking, obviously, from an IRR standpoint, anywhere between 16 to 18% IRR. Obviously, the higher the better, but right now, with as tight as the market is, it's actually still challenging to get it into that 16 to 18% mark. Without trying to really fudge the numbers, if you will, which we try to fudge the numbers in a good way and not in a bad way, and I'll explain that in a minute. Because you can fudge numbers to make things look good, and you're fudging it in the wrong way. So,
right.
And I know you know what I mean.
Yeah.
But we're also looking for cash on cash annualized over a 5-year hold, because most of ours are 5 years. Sometimes they go to 7 years, of anywhere between 10 to 11%. And that's annualized. So in the first year or two, there might be a little bit lower due to some of the renovations and vacancies. But one of the things that when we're doing an underwriting, like this property that we just got in Greenville, when we did the initial underwriting on it, the IRR was through the roof. I mean, it was like 30, 31, 32%. There's no way in a syndicated deal you're going to present that to an investor.
Nope. No.
But when you do your own conservative underwriting and it comes out that well, it doesn't mean something's wrong. I mean, obviously look at your data and make sure it's proper, but that's when you look at your deal and you go, how can I make this deal even more conservative? And so what we do is we can try to expand the exit cap rate, the entry and the exit cap rate, so that we're actually making it more conservative, projecting that we're going to be selling and exiting at that higher cap rate, which it always looks better that way too from the investor standpoint. The more you can spread that, the better it is. But the other way is if your deal comes in at like 10% IRR, and then you start to make the numbers, well, maybe we could push the rents up a little bit more.
Yeah, you get yourself in trouble there.
And that's when you get in trouble. And that's when you start to, compress those entry and exit cap rates. And I've seen some deals out there that only have a, 10 or 20 basis spread on the entry and the exit cap rate, and just to make the deal work. And that's trying to make the deal work at a 15% IRR. And so you're not leaving yourself a lot of room for error. And, the nice thing about most of the multifamily deals out there is that even if the deal doesn't do real well during the hold period, a lot of times it does sort of correct itself upon exit in many situations. Doesn't always happen, but that is one of the nice things about investing in apartments specifically, is that a lot of times some of the wrongs can be corrected by holding on to it long enough to actually exit at a good way. But I don't project that, of course, in the underwriting. You always want to make sure that in that initial stage of the underwriting that you're trying to be conservative.
Well, let's change gears just a little bit. I want to talk about raising money, because the deals you're buying, you obviously got to have an equity piece. You got to go out and raise money. it's a big roadblock for a lot of the new syndicators who are trying to get in this business. But how do you actually raise your money, and maybe one or two or three tips you can give the new guys on what they can do to raise money?
Sure. So I will say that, I because of my background, in chiropractic, but, also with some of the physicians that I've hired and some of the physician networks that I've created, I actually speak and coach to medical doctors, DOs, chiros, things like that. And so I usually, when I'm speaking in front of these groups, I'd be a room of, 200, MDs or DOs, and I'll speak on how to market their practice, because I'm a very good marketer when it comes to the practice is concerned, and putting systems and procedures and processes in place to make sure that we get results and tracking those results. And so usually when I'm speaking, I'll be speaking on marketing, and all of a sudden, like 20 minutes into the presentation, a picture of an apartment complex will show up. And, it'll spark my thought that, oh yeah, by the way, I wanted to talk to you a little bit about investing in apartments. And I don't spend long there. I spend like maybe 2 or 3 minutes talking a little bit about why I got into it and the tax advantages and stuff like that. And usually half a dozen to a dozen people will come up to me afterwards and talk to me about possibly getting, get some information to be one of our investor partners. So not everyone that's listening is going to be able to get in front of a physician group or something like that and do that, but there's definitely probably something in your background that you can teach on that you can start to try to get in front of groups for and do that. And so think about where you have an expertise and where you can provide value to a group of people, whether it be 20 people, 100 people. I mean, the groups that I've spoken to that are smaller have actually gotten me and resulted in more capital raising than some of the larger groups, because it's more intimate. You create that more of a relationship with them, and that connection. And so I would definitely encourage your listeners to do that. But I would also, 2 other tips I would give you on this is, a lot of people in this space, people who are, one thing that's really big right now is podcasts. I have a podcast myself. It's not real estate related. It's actually called Tough Decisions for Entrepreneurs. And my wife and I do this podcast, and we interview entrepreneurs from around the world. We actually had some earlier today. We usually do them in batches, like 12 to 15 in the day, every 30 minutes back to back. And so we did 12 of them today already. And we had, somebody from South Africa. We had somebody from the UK. We had somebody from Australia and Canada. And so they're from all over the world, but we get to create those connections and those relationships with those people as well. Now, I will say that I haven't had very many of those people actually invest with me, but the people who are listening, I have had people reach out to us because we sponsor our own show, if you will, and when we put an ad out there for Handford Capital, they go on there and go to our website and fill out the investor form and that kind of stuff, and it kind of sparks those people that want to invest with us because they hear us all day, every day, because it's a daily podcast. We're not just releasing one a week. It's every day there's a podcast, an episode going out. And so, but what I'll say is people in the real estate space, especially in the multifamily syndication space, they're trying to raise money. The only thing that they try to do is try to get on real estate-related podcasts. And so what I do is, again, just like I look outside the box and think outside the box when I look at a property, I do the same thing when I'm trying to market myself. I don't want to just be everywhere where everyone else is, because then I get watered down. And so what I try to do is I try to find non-real estate related podcasts to get on and be interviewed. And those are the podcasts that I get a lot of people, going to the Handford Capital website, filling out the investor form, going, hey, I heard you on this podcast or that podcast, and I want more information about you. And they're not on anybody else's syndication list because no one else is doing it, right? And so that's one little kind of, secret, if you will, that I don't think I've probably shared that with anybody else. So you're very special for me to be able to share that with your listeners here, Craig.
That was a great tip, actually. I mean, that's...
Yeah, and so along those same lines, the third thing is that I would say, so the first one was, get in front of groups, try to share on some expertise that you have, and then talking about the investments in a short period of time somewhere in there and sparking that interest. The second would be to be able to go on non-real estate related podcasts. I'm not saying don't go on the real estate related ones, but just make sure that you go on ones where everybody else is not. And then the third thing, and these all 3 of these kind of go hand in hand. The third thing is when you go to meetup groups, like your real estate meetup groups or your REIA clubs or whatever, it's going to be very hard for you to find high net worth investors or those accredited investors, which is really what you want for your deals. And when you do, so let's just say you go to a meetup or a REIA club, meeting or whatever, and you go there, when a high net worth individual walks in the room, most people can figure out that that person probably is an investor of some sort. Just by the way they carry themselves, by the way they talk to other people. And a lot of times you go to these groups and they label you. Oh, there's the passive investor walking in. And guess what happens? It's like a fat rat on a Cheeto. Everybody,
that's great.
It just pounds on. So again, you are now in a room where everybody's looking for the same thing. Why would you want to go I'm not saying don't go to those. I think there's still value and merit in those because you still need to network with those other people and partner with other people and build your team and things like that. So I'm not discounting it, but I'm saying when you're trying to raise capital, go to where people are not. And so what I like to do is I like to go to groups, executive clubs. So in most cities around the world, around the country, there are executive clubs, and there's one that I'm a part of, which is called Club Corp, CLUBCORP, Club Corp. And on that, with that club, I spend like maybe $170 a month for the membership, and you have to know somebody else in order to get sponsored to be able to be part of those groups. And if any of you want one of those, just let me know. I can sponsor you. And I don't get anything for it. I might get like a free appetizer or something when I go in, but it basically allows you to have networking opportunities with other people that are usually high net worth people, congressmen, physicians, lawyers, other service professionals that have a higher net worth and that most likely are accredited, and they're going to these groups and these meetings because every week I get an email from this group. And we have one here in town, and every week there's a networking opportunity that I get to go to and rub shoulders with these high net worth individuals. And again, you're not going to go and rub shoulders with these high net worth individuals and the day you meet them, have them write you a check for $100,000 to invest in one of your deals. This business with capital raising is a relationship business. It's
Bingo.
Not a business where you're just going to go in there and say, hey, write me a check. Those are the type of people that come and visit me, and I put a brick wall up, and I never talk to them again.
Great tips. But you also get involved with partnering with some investors, right? You don't just syndicate your own deals, but some guys that got deals, you might partner with them somehow. Can you tell us about that?
Sure. So, obviously I'm putting my own deals together and raising my own capital. If the deal is right, I will help other syndicators, raise some capital for their deals. I don't do that on a very large scale. It's on a very limited basis just because of some of the deals that we're doing ourselves, and they need to not tap our investors, if you will, too much and water that down, that pipeline down. But the third thing is kind of what you're hinting at is I also do non-recourse KP loan guarantor work for Fannie Mae, Freddie Mac loans, as well as some of the bridge lenders. And so that's an opportunity that, some of your listeners, if that's something that they need for their group, somebody could jump on as that KP loan guarantor. I am able to do that for them. Because of my net worth and liquidity and experience, I can help check the boxes for them to be able to help them get some larger deals if that's what's holding them back.
So we'll get your contact information here, make sure everybody's got it to get a hold of you for this and some other things. But you're big in these meetup groups, right? Every time I see you on a plane flying around the country setting up a new meetup group. So why don't you tell us about this and how our guys can get involved with those?
Sure. So we actually started about 3 months ago a group called the Multifamily Investor Nation, and it started out as being meetup groups all around the country, and I started to try to find co-organizers to put these meetups together for me. And one of the biggest reasons why people don't do meetups is because they're so hard to put together as far as finding a venue and a speaker and all this kind of stuff. And so I wanted to put together a program that made it very simple for these groups to be able to get together and network and really have some opportunities to be able to, get to know people in their area that are in the multifamily or want to be in the multifamily investing space. And so I started leveraging the meetup.com platform, and you can go to the meetup.com platform via going to our multifamilyinvestornation.com website. There's a link there to click on it, and you can see that there we have 34 chapters across the country with a little over 2,100 members at this point. And each one of those groups meets on a monthly basis, some of them every other week, and gets together and has informal networking opportunities. So instead of trying to put together a venue and a speaker, it's basically informal times to be able to kind of network with other people. And so at these events, instead of having to, like I said, find a venue and all that stuff, all we usually do is we go to like a Panera Bread or a Starbucks or something like that. And these are put together throughout the entire country so you can get together and meet these people. And the other thing that I want all of our members to use it for is to, if they travel to another area, like to give you the example, I just took a family vacation, took our 4 kids, I have 4 little ones, got an 8-year-old, 6-year-old, 2-year-old, and a 10-month-old. And so we flew them all to the Mall of America in Minneapolis, Minnesota. And so we go there usually about once a year just because I really like being able to have a theme park indoors and you never have to leave for like 2 or 3 days and do anything. So you can actually take it from the airport, the light rail, to the mall. There's a hotel. There's 2 hotels attached to the mall, 4 stories. It's like it's the largest mall in the country. They have 7 acres inside with 26 roller coasters, and it's just a lot of fun.
Yeah.
But when I was there, I decided that I wanted to host a meetup one morning while I was there. So we flew in Sunday, and then the next morning, on Monday morning, I scheduled a meetup at one of the breakfast at one of the restaurants that was there at the hotel. And so I actually was able to do a meetup while I was there, and I leveraged the meetup platform. So I leveraged the multifamilyinvestornation.com meetups to be able to do that. And that's what I want our members to do is if you're traveling somewhere and we have a meetup group there, send me an email, send me a message. We'll put up a meetup when you're there, and you just tell me the spot and the space and the time, and then you can have people networking when you don't even live there. And so it's a great way to be able to really expand your network. And again, it kind of goes back to raising capital. With these meetups like this that are more informal, I've actually raised quite a bit of money from that, not from the group per se, because for regulatory reasons, I don't just blast out all of our deals to people that just join our meetup group, because we have to have some sort of pre-existing relationship with them. And so we build a relationship with them if they raise their hand and say, hey, I'd like to invest with you. Or if I meet them in person at one of the meetups, and they say they'd like to, then of course we continue to build that relationship and send them some of the deals if they ask for it. So that's the biggest thing we've done with the Multifamily Investor Nation group, is really built it out like that. And we're also doing weekly webinars. Right after this call, we'll be doing one on underwriting strategies for large 100-unit apartments. And the group that we have is not just for large apartments. Obviously that's where my space is, but that's not exactly where everybody in the multifamilyinvestornation.com is. They're all, in a whole gamut of things. They might be doing duplexes and tries and 10 units and 15 and, 16 or whatever, or 30 or 40 or 50. So that's kind of a grand span of, people who are new in the space buying some of the smaller properties, or even some more of the veteran people who are buying some of the little bit larger properties, 100 plus units or more. And so it's a great opportunity to be able to learn and be educated. And we don't charge for these weekly webinars, but we try to bring on some experts. I know you're going to jump on one with us and share with our group. And so it's just a great opportunity to be able to network as well.
Well, you've really given us a lot of gold nuggets here today, Dan. I just want to thank you so much. The good thing is you're going to be sharing gold nuggets in the middle of January. You got a big virtual boot camp, a big virtual multifamily training event that you're putting together, and you got a bunch of great people coming to share their experience and knowledge. I wonder if you could spend a little bit of time, tell us about what this is all about and why some of the value hands should go to this event to further their business.
Well, number one, you're going to be speaking at one of the sessions, so that's why they need to come.
Exactly. That's it. That's the only reason why.
Yes, that's a great reason. So
yep.
We have, it's going to be a virtual online event, but we are also working on putting together some watch parties across the country so that you can still build up that networking component of an event as well. So right now it's online, it's virtual. We have 30. We'll probably have closer to 40 plus speakers by the time I'm done. So right now we have 29 confirmed speakers, and we're working on another 17. So I think by the end of this week we should have over 40 speakers that are going to be confirmed for the event. And so all the sessions will be recorded, but it'll be Thursday, Friday, Saturday from 8:30 in the morning until 6:30. That's Eastern time. But all the sessions will be recorded, and all of the attendees will be able to have access to the recordings afterwards. And so if they want to watch it live and replay it later, they can, or if they miss a session or whatever, they can do that as well. And so it's going to be a great opportunity. We're going to have 6 different panels, have different discussions and different topics. But we're going to be talking about all kinds of topics of raising capital, the high net worth investor mindset, obviously with finding deals and working with brokers and working with lenders and trying to close up a deal, and how to properly exit a deal, and how to find, when we're talking about finding deals, how to find the small deals, the large deals, and everything in between. And so there's a lot of content that we're going to be providing in that 3-day period of time. And I put this event together because I know there's a lot of people that get really busy in life. They just don't have time to go away and travel somewhere, or they want to try to do some things from the comfort of their own home, or maybe there's another event going on at the same time, and they want to be able to take advantage of both of them, and they can come to this event. So if you want, I did go ahead and put together, Craig, a promo code for your Value Hound Academy members. If they want to go to the website and register, they can get $100 off the ticket. And so they can go to MFIN, that stands for Multifamily Investor Nation. You can go to mfinsummit.com, and when they go there, it'll be the main event page, and they can see kind of what's going to happen there, all the different speakers that's going to be there, including yourself, and some of the content that will be provided. They'll put their email in, and when they go to the actual page to check out with their ticket, if you use the promo code ValueHound, all one word, ValueHound, it will give you $100 off for your members to be able to attend that event.
Well, that's great. I recommend that everybody in our group go to this, just because there's such a broad range of people that they can learn from on various subjects. Everybody's got their issues they're dealing with in their business. Well, everybody's going to be talking about everything. So it's a great way to get some of your questions answered and learn some new ideas to help grow and build your business. So I recommend
one more thing, Craig, that will help your members is, and I forgot to mention this, is if you go and register for it, you will be able to, everybody who registers for the event, to help with the networking component of it, will get access to all of the attendees' name and emails. And that way you could network with people after the fact, and you'll also all the attendees will be put on a closed Facebook group just for the attendees. Now, some of you might go, well, I don't want all my information out there with everybody. That's okay. Once you register, you shoot us an email. We won't put your name on the email list, but in return, you won't get the list either. It's just, it's just kind of the fair thing that we're trying to do, that some people don't want their information on there, and that's fine. You just don't get the list. So you get to pay to play, or share your name to play, if you will. But it's a great opportunity to be able to build your investor database, to be able to reach out to some of these people who are attending that, have some capital to place, and it's going to be a great event. And I really appreciate you supporting it and speaking at it as well.
Well, that's awesome. So I know a lot of the people listening will definitely want to get a hold of you. What's the best way for them to get a hold of you?
Sure. They can send me an email at Dan, D-A-N, at multifamilyinvestornation.com. So just all one word, Dan at multifamilyinvestornation.com. I
hope you enjoyed this interview. For more information on Dan Handford, please visit his website at www.multifamilyinvestornation.com, or you can email him at dan@multifamilyinvestornation.com. To get more information on Dan's 3-day virtual Multifamily Investor Nation Summit, visit his website at www.mfinsummit.com. If you can register for the summit, make sure you enter your $100 discount code, which is ValueHound. Just one word, ValueHound. Thanks for taking the time to listen to this interview. For any other questions or comments or ideas that you may have, please email me at craig@valuehoundacademy.com.